90%. One company makes 90% of the chips used in every Starlink satellite SpaceX has ever launched. That's 7.5 billion chips over a decade-long contract, and most investors have never even heard of this company. I'm going to tell you who and what this company is, what they do. I'm going to show you the revenue numbers that prove that this company's only getting started. But did you know there's a second company that also is highly integrated with SpaceX? This company doesn't make anything that goes into space, but it makes the components that make space usable from the ground. And Boeing recently created a partnership with them, which you may have missed as a headline in the news. Unless you've been living under a rock, SpaceX just went public within the last couple of weeks, the biggest in Wall Street history. With all the hype, everyone is jumping on the bandwagon, buying into the rocket hype, but I'm not. I'm looking at the picks and shovels that are going to make money along with SpaceX over the long road. And by the end of this video, you're going to know which two companies I'm looking at to invest in, and you'll know exactly why it might be a good fit for your portfolio. But before we get started, welcome back to the channel where we discuss how to grow our portfolios for the ultimate portfolio payday. Just remember, I'm some random dude on the internet, so always make sure to do your own due diligence before you invest any of your hard-earned money in the market. What we discuss here definitely works for my portfolio, but it might not work for yours. So let's get started. SpaceX at a $1.75 trillion valuation on day one is the problem, not an opportunity. When a company is priced at that valuation right out the gate, the easy money is long gone. All the money has been made by the venture capitalists, the employees, the insiders, the institutional holders. Think Tesla bulls like Ron Barron, who's been investing in SpaceX for the last 10 years. The retail investor buying SpaceX on day one is buying at the top of the cycle. It's already gone up over $200, and now today it's trading in the 150s, back to where it started. But the companies that supply SpaceX with all their picks and shovels, they don't get priced in at a $1 trillion valuation. They're valued at their own earnings, their own growth, their own projections. And right now, two of those suppliers are trading at a fraction of what their long-term relationship with SpaceX is worth. ST Microelectronics is a global semiconductor company located in Geneva, Switzerland. Ticker symbol STM. They're one of the largest chip manufacturers throughout Europe. They make microcontrollers, sensors, power electronics, and radio frequency components. And since 2015, they've been co-designing and custom making the chips that go inside SpaceX's Starlink satellites. As of 2025, ST Microelectronics holds approximately 90% market share in chips specifically designed for Earth's low-orbit satellite systems. If SpaceX is building a Starlink satellite right now, there's a good probability that all the chips are coming from ST Microelectronics. STM and SpaceX is a decade-long partnership with key technology for satellites and user terminals. ST products have been critical in helping SpaceX scale production. Remy L. Ozan, President, ST Microelectronics. To give you an idea of just how big this chip contract really is, 7.5 billion circuit chipsets to SpaceX's Starlink since 2021. Not millions, not hundreds of thousands, 7.5 billion chips. Now let's take a look at what this relationship is doing to the numbers. As you can see, in 2021, the LEO revenue was 175 million. 2025, that grew to 600 million. The growth in those 4 years is 243%. Now, their revenue targets for this year, 2026, is $1 billion. And in the next 3 years, their target is over $3 billion. The executive in charge of this division quotes, "We are just in the early innings of this market." Their overall company revenue in 2025 was $11.8 billion. Space is still a growing fraction of that total, which means you're getting that SpaceX supply story inside a much larger, diversified semiconductor company, not a single customer bet. Current price today is $79.91. Bank of America has upgraded this to a buy with a target of 100. Deutsche Bank is targeted to 75 euros. Mizuho is an outperform ranking, target raised to $84. The average analyst opinion is somewhere in the mid-60s, currently below the market price. So obviously we don't blow smoke, sugarcoat. We keep it real as far as the pros and the cons of every investment. ST Microelectronics is up over 170% year to date. So even though Bank of America upgraded their target price, 14 different analysts all have the price below what it's currently trading at. Simply Wall Street estimates that the price is currently trading at 46% above what they consider the fair value. And on June 16th of this year, ST Microelectronics issued a $1.5 billion convertible bond offering. The stock slid on that announcement as there is dilution risk and increased debt load in the real near term. You definitely need to know that before you touch this name. The thesis here is that it's not a cheap stock. What it really is that there is a company supplying 90% of the chips, still in the early innings of a global deployment, with a $3 billion revenue target over the next 3 years. But that's definitely a long-term conviction play and not a short-term day trade. So that's company number one. Next, we're going to talk about this company to make sure that all those satellites are actually able to be used. You have 10,000 Starlink satellites orbiting around the Earth. Each one is loaded with STM chips, constantly transmitting signals. But here's what nobody talks about. A satellite floating around in outer space without a way to talk to the ground is just a floating piece of metal. Company number two is Gilat Satellite Networks, ticker symbol GILT. STM is the brain inside the satellite. Gilat is the nervous system that connects it to the world below. Gilat designs and manufactures ground-side satellite communications infrastructure. Very small aperture terminal systems, satellite modems, electronically steered antennas, solid-state power amplifiers, the broadband gateways, the equipment that catches those signals and turns them into internet connections that people can actually read and understand. That's a different market completely. And there's one company that's been quietly dominating it this entire time. If you want to use a satellite network, whether for in-flight network on a Boeing jet, remote broadband in rural India, or military field communications, Gilat makes a significant portion of that hardware that makes it work on the ground. And they have operations in Israel, the United States, Peru, and dozens of international markets. In 2024, they had a revenue of about $305 million. In 2025, their revenue grew by 48% to $451 million. So far in Q1 of this year, they're at $110 million. Q2 net income is $5.23 million versus a negative $6 million loss from last year. Their Q1 2026 EBITDA is $15.1 million, and they're expecting a full year guidance of $500 to $520 million in revenue. In a single quarter, this company went from a net loss to $5.2 million. Their adjusted EBITDA doubled year over year, and management reiterated their full year guidance to over $500 million in revenue. So the catalysts are what's really helping putting this company on the map to make more and more money. First, Boeing and Gilat reached a formal milestone toward offering Gilat's Sidewinder multi-orbit antenna as a future standard line-fit solution for in-flight connectivity on Boeing commercial aircrafts. That is a disclosed commercial agreement with the world's largest aircraft manufacturer. If that becomes a standard install on Boeing jets, the revenue implications are massive. Second, Gilat signed a multi-million-dollar deal with Nelco to deploy its SkyEdge 4 platform on India's first Ka-band high-throughput satellite service. India's satellite broadband market is enormous and barely penetrated. Third, Gilat received a $7 million plus order for its EnduroStream solid-state power amplifiers to support the U.S. Department of Defense. Defense contracts means long cycles, stable revenue, and high margins. Fourth, Gilat partnered with AWS and SES Space and Defense to demonstrate a virtualized satellite gateways architecture. Cloud-native satellite infrastructure is a market that barely exists, yet at a commercial scale. On June 15th, 2026, just within the last couple of weeks, Gilat announced a definitive agreement to acquire the majority of Comtech Telecommunications Satellite and Space Communications segment for $157.5 million in cash. Post-acquisition, combined annual revenue is projected to exceed $700 million, and Gilat's defense revenues more than double overnight. Needham analyst Ryan Kuntz reiterated that his buy rating and maintained his $20 price target, specifically citing this acquisition as the driver of expanded U.S. defense presence and revenue scale. So the numbers right now, the current price is in the $12 range. The 52-week high and low ranges between $20 and $6. Analyst targets rate it as a strong buy, #1 rating, and Wall Street consensus is a buy. So once again, there's real risk to this stock, just like we talked about with ST Microelectronics. There's definitely a lot of risk with Gilat itself. So let's go over the risks so you can decide for yourself if this is something that you want to add to your portfolio. For STM, the average analyst target across 14 desks is $64, currently below the stock price of $79. Simply Wall Street estimates the stock is 46% above its intrinsic fair value. 2025 total company revenue declined 11% versus 2024. On June 16th, they issued $1.5 billion in convertible bond offerings. There's a net profit margin of 1.4%. High revenue, low margin business. And 90% of the market share in a fast-growing market will attract new competitors. Now for gilt risks, the stock is negative 41% from its 52-week high of $20. Trading currently at $12. Comtech acquisition will consume most of Gilat's $170 million net cash balance. Simply Wall Street describes shares as trading 20% above intrinsic value estimate even at $12. The Israeli headquarters issue is geopolitical, currency, and regional conflict risks are real and not theoretical. And only 3 analysts have covered gilt. One downgrade would move this stock significantly lower. So how do you actually add these to your portfolio? They're more of a thematic tilt in your portfolio. Position size based on risk tolerance and confidence in the actual company itself. You definitely want to make this a small percentage of your portfolio, as anything greater can really skew to the downside. If your portfolio is heavy in VOO or SPY and some other foundational ETFs or stocks, think about putting maybe 2 to 5% into this technology for space. This way it gives you real exposure to the sector, but it's not going to be enough to where your portfolio will suffer if something happens in the industry. If SpaceX goes down, the rest of these companies will follow. So it's definitely something you want to think about, especially since SpaceX is so new to the market and we're going to see a lot of fluctuations up and down based on price action. So just to review, ST Microelectronics makes 90% of the chips in the Starlink satellites. 7.5 billion chips already since 2021. $3 billion revenue target over the next 3 years. It's up 170% on the year, so it's not done growing, and it's also not cheap. These two companies get paid every single time SpaceX launches a satellite and connects another user. That's the trade. I'd love to hear from you in the comments. Did you already buy SpaceX? Are you planning to buy STM or GILT? If you'd like to learn more about how I've beaten the market in the last couple of years, take a look at this video right here. Please like and subscribe as it helps more viewers check out the channel. And until the next time, have a good one.